Tuesday's buy trade. But fundamentally, going back to this question about why the market moves up and down in the first place, why does the market move up and down, right? So a key level holds as supply, sellers are in control. A key level fails to hold, sellers start to fail. Key level starts to hold as demand, right? Sellers are aggressive, and as price breaks above the level, those sellers have failed. This is basically how a level holds, right? So focus on the last two sections I've done here, right? So key level starts to hold as demand, sellers are aggressive, aggressive sellers fail to break below the level. So that is exactly what happened on Tuesday, right? So what happened is key level broke above, aggressive sellers came back in, these aggressive sellers failed, we break above. This means that a supply zone has now flipped to a demand zone, and that is the reason we bought. It's as simple as that, right? So, and the last thing to finish off on is for the presentation is here, a finished auction, right? So seeing a zero, on this case the ask side, seeing a zero gives us a strong indication that the reversal is going to happen, because when you see a zero, buyers and sellers have agreed that they're no longer interested in trading at that price. So you can see via the order flow footprint charts that a reversal is much more likely because there's a zero on one side. We call this a finished auction. There is a much higher probability of a reversal when you see a zero on one side of the footprint charts. So that's something to look out for as well. Now, obviously making this video, there was another huge sell-off the next day. So we're going to kind of break through that as well. So this was the sell-off from Wednesday the 16th. So what happened was we came into this level. I took a dumb trade over here. We came into this level. This was a level from last week, key level. And we're going to go through the same process, right? So first I tried a short, dumb trade, completely dumb trade, lost out nearly $300, dumb trade. That was a trade, so almost got stopped out, just stopped before the wick. I guess the wick took me out. But this was the winning trade. That was a very, very aggressive short that went all the way down. So the question is, what was going on in this key level? What was going on in this price action, right? What made this price action successful to sell from? Well, it's the same thing as before flipped on its head. So we're looking for this case, aggressive buyers to fail. So here was my entry, and that was my initial TP, about a 1 to whatever it is, 1 to 1.5. So without even diving in, right, what we can see is we can see a lot of aggressive buyers, right? Even here, blue delta at the top, right? Even this candle here, this is an aggressive red candle with buyers at the top. So buyers themselves are constantly being rejected. So we see sellers in control at this region, right? The reason I know sellers are in control at this region is because the aggressive buyers have no follow through. Instead, the aggressive buyers have negative follow through. So basically price is going down despite aggressive sellers being present. So aggressive buyers have failed, aggressive sellers are in control. And this was an absolutely monster trade. I didn't catch all of it, but I think I caught whatever it was, $495, something like that. And we really had a melt off, right? So catching trades like these can be simple if you simply understood how to read the delta at key levels.